Hey guys, Rob Mitchell. Thanks for joining me for this mini webinar on advanced concepts in day trading money management using NinjaTrader trading systems. In this video, I want to show you some really cool stuff that can really change up your game and give you a lot of flexibility so that you can trade the way you want to using the same system that you might already be using. Yeah. And without any further delay, past performance is not necessarily indicative of future results. There's a risk of loss trading futures. Don't use the grocery money for trading. On this day here where I'm making this video, we are in a really high volatility environment. One of the things about the market is that the volatility has just increased and increased and increased over the last couple few years, and it's gotten to the point in some of the stock indexes, I would say that it's not even tradable because you just can't do it. Yeah, it's just so fast that you can't even do it. I'm going to show you some ways to deal with that. There's other tools that we have that I probably won't cover in today's video that can assist you in dealing with the rate at which you have to work in order to be successful trading in these markets. Yeah. In this video, I'm going to show some important day trading money management advice and secrets that can help you up your trading game. And you can benefit from this concept, whether it be in the E-mini S&P futures, crude oil futures, or any reasonably volatile futures market you can day trade in. We even have some people use these systems for stock trading systems using some of the more volatile stocks. Yeah. It's important that you know that you can shift your money management to get different results, which can make a really big difference for you. You can create situations that you can give a trade some breathing room to get some bigger results out of it without really degrading the performance. In fact, you might even be able to improve the performance while getting what you want out of it that you didn't know that you could using some of the methods that I'm going to show you here. You can also use this method to scale the market volatility. Now, I had just mentioned market volatility a couple of minutes ago, and the thing about it is if the market gets really volatile, it tends to follow through. It's really fast, but it tends to follow through a lot. And if you do that, you don't want to be doing the same little scalping stuff that you're would have been doing a couple few years ago. You want to expand the thing out so that you can take advantage of those things. And you might not be aware that you're keeping yourself from taking advantage of that volatility and the return that it could give you. Yeah. So some of the things that I'm gonna try and cover, we're gonna pull up a Smart TradeMarkers report for a system that I personally trade in the E-mini S&Ps, and I'm gonna try and cover the following things: adjusting for expanded market volatility. I've already touched on that a little bit. And then also being aware that when it contracts, you can scale that back a little bit. But the way we're going to explore this is going to give you a feel for what it would look like if you do that. We're going to talk about setting up for preferred win-loss ratio. This is one of the main things that you want to know about in a system, and the performance of a system is what's the win-loss ratio and what are the things that are making that happen. Yeah, I'm going to show you a little bit about that. And then we're going to set up for less scalping and more for big trades. I've already alluded to that. Doing it so you lock in risk while you're doing it so you can take more out of it without having to worry about it past a certain point. You just lock it in, get a break-even stop. And optimizing for drawdown, average trade, etc., allowing for reduced win-loss and break-even stops and more. In today's video, I'm going to use a trading system that uses a 4-quadrant trading system design approach using Smart Indicators Trading Room Pack from IndicatorSmart. If you want to learn more about it later on, you can go over there to IndicatorSmart and learn a little bit more about that. Okay, so without further delay, this is a TradeMarkers report for a system that I do in the E-mini S&Ps. And these trades are actually marked live over the last couple of days. And I started looking at some different money management approaches that I thought that you'd enjoy and that you'd benefit from. This is Smart TradeMarkers, and this gives you a lot of flexibility in knowing what you can and cannot do with your system. And today I'm going to focus mostly on this summary page and on the aggregate stats page. We also have all kinds of other features here, but I'm just going to cover those couple. And like I said, this is a smart trading system, smart trading system from IndicatorSmart. The first thing I want to do is I have a normal, what we have normal kind of a setup. And by the way, everything on this trade markers report is designed to work in conjunction with NinjaTrader's built-in ATM capabilities. So whatever I dial in on this, I can make it do it. Yeah, I can make it do it. So one of the things that I have here, we're not going to talk about specific performance. I'm not telling you in today's video that you can make a bunch of money, if you trade this system. I'm focusing on your system and being able to have some flexibility with it. Yeah, so that's the main thing that I'm trying to get across here. So I have three positions here. I've got a first target at 4 ticks. I have a second target at 16. I'm going to change that to 8. So we're just going to go 4, 8, 12. And we have a 24 tick initial stop loss. Now check this out. If I compute this, if I go to that 16 on that last one, I bumped the performance just about a couple $1,000s. Well, one question that I might ask myself on that over the 12 tick target, one question that I might ask myself on that is, do I want to sit in a trade and wait for that to happen? Do I want the stress of it, or do I want to get out of it a little quicker? So I can adjust these more accordingly. Let's say that I don't care so much about getting to 4 ticks and taking that off, because most of the trades, when I look at this and I ask myself the question, am I getting twice as much by going to 8 ticks over 4? Because if I'm getting twice as much out of it, or close to twice as much out of it, I might just want to go for the 8 and not worry about the 4. And this is what I was suggesting earlier, is in this high volatility environment, you may not be benefiting yourself so much. So I could actually ramp that up and get a similar end result. Yeah, in fact, it gets better. Yeah, it gets better if I'm willing to wait. Now, check this out. I have a 24 tick stop on here, but what would happen if I pare that guy down? Let's say I pare that guy down to 16. Well, it doesn't change much at all. Yeah, it doesn't change much at all. So a lot of people approach me and ask me about stop losses, and I've done videos on this subject before. The actual stop loss that you use doesn't change your system performance that much, but it will probably change your win percent. So if you use stops that are too small, like if I take this down to 12, so you have 85 and 90 with an overall win loss of 83%. These numbers are going to go down to 80 and 73 and then down to 77. And when I go to a 12 tick stop, well, what's going to happen is you're going to get taken out real quick a lot of times. Yeah, you're going to get taken out really quick a lot of times. And you might not want to do that. Now, if I go over to this aggregate stats page and I take a look at it, with this particular setup, I have a win-loss ratio of 0.72. When you have a win-loss ratio of 0.72, it means that your average loser is a little bit bigger than your average winner. And you can see that right here, 450 versus 324. Now, I find that I don't really want to have my loss be a lot more than my gains in my trades. And so one of the ways that I use Smart TradeMarkers is I use it to modulate that to a point where I'm getting as much back as I lose on the winning trades. And what I like to see is something close to a even 1-to-1 ratio or better. Why? Because if I have a loser, I recover it in one trade. Yeah. As opposed to if you ran that 24 on the initial one, when you get hit, you're like, oh no, I gotta win a whole bunch of trades to get it back, right? And so I wouldn't necessarily want to use a 12 tick stop, but because you're going to get taken out a good bit, but that's okay. But when you use a 12 tick stop, you get a ratio of about 0.72, and you can see that that is pretty consistent across long and short. In fact, these numbers are extremely close, both long and short. Yeah, and so this isn't biased one side or the other, it's pretty close. But if I up this guy to 16, if I up my stop to 16, you'll see that my profitability goes up a little bit. And by go over to my aggregate stats, and these numbers have come up a little bit. Yeah, they've come up a little bit. What if I go to 20? Let's go one more to 20. And the number's actually going down. What that means is that using the bigger stop is actually hurting me. And I could say this win-loss ratio that I'm focusing on right here is a psychology rating. It's like how painful can it be to trade the system. So I'm going to take this guy back to 16. What would happen if I go to a break even after 5 ticks after I go, usually I use like a 4-tick bar. If I do that, then you can see that these numbers lock in, yeah, because as soon as I've gone to a 5 ticks, I go to a break even, and it's not as painful for me. But what that's going to do is it's going to drop the win-loss ratio a good bit. Yeah. So what would happen if I decided to do the 12 tick number? That's almost half. I could do the 12, take that 8 down to 0, and up my 12 tick to originally I had 1, 1, and 1 there, yeah. So when I did that, this is a return about 51 with the break-even stop at 16. And if I go 0, 0, and then I make this one 3 lots at 12, 3 lots at 12, I get a good bit more with that, a good bit more with that. And you'll notice that the drawdown there is about 1379. Now this number, when you make that break even, is artificially made low. It's artificially made low. And the reason that it's done that is because I don't want to have a trade go into success and then come back into me. Yeah. I want to get the ones that run away, and under the current market circumstances, you're inclined to do that. So if I go 16 there, how about if I go 16 here? So I make both of these 16. That'd be $300 in the ES. I'll get this guy up to about 73K. And when I go over here, I actually get that win-loss ratio up to about 1, which is exactly what I was saying. Yeah. If I have a losing trade, if I get stopped out on one, I lose $300, but the probability of me making back on the next trade is pretty high. In fact, I can ask myself, what are my consecutive losers? I've had 7 consecutive losses. I'm actually surprised about that. I find that to be improbable. Oh, because of my break-even stop is not checked. So if I do my break-even stop, my consecutive losses goes to 1. And if I get stopped out, on a trade, in other words, I'm just wrong right out the gate. It doesn't even go 5 ticks in my favor. It doesn't change my performance that much. It drops at about 10K, you know. But I'm willing to do that for the benefit of getting a win-loss ratio that would be 1 to 1 if I uncheck this. So in this particular case, I've spent a lot of this video talking about win-loss ratio, and when I make this choice to break that even, what it does is it makes it so that I don't get a winning trade and it comes back into it. Now, could I make this a little bit bigger? I could. Yeah, I could turn this to 8 if I wanted to, or anything else, and then you could go look at the numbers for it. Yeah. What's going to happen is as this gets bigger, it's going to tend to make that win-loss ratio a little bit bigger. And what this does is it lets you see what's going on in a whole reality that you can't even really see. But what this does is it gets me a win percentage above 90%, which I really, really like because I'm just winning all the time. You can see on here is a 60 consecutive winning trades when I do it this way, and 1 consecutive loss. The psychology of trading something like this is incredibly high, whereas when you do it in some of the other ones that we've looked at, it can get kind of depressing. Yeah. And so I like to keep the positivity high. I like all those consecutive wins because when I trade, I'm just like, okay, I have no concern about pressing the button for it because I'm just going to nail it, nail it, nail it, nail it. What do I do? I use Smart Trade Entry Assist is a product that we use to enable you to execute in these fast markets like this. So I like to get that 1-to-1. And then I don't mind paring it down. I get my 1-to-1 right there on the win-loss ratio at 70%. And then what I do is I use this to lock it in. And yes, it does drop it in half, but I get the benefit from it. And so you can go back and forth with the numbers and just kind of see what that looks like. What would happen if I pared this down to 12 ticks? Yeah. It looks like I'll lose about $7,000. I'm not going to make a big deal about that. And then look, my max wins goes to 31 versus 2 on the losses. You know? So by going that extra 4 ticks, I'd pick up quite a bit of comfort, I would say. Pick up quite a bit of comfort. I could even do this if I wanted to. We could do one. Let's just go 12 and 12. 12 and 12 with 3. And you could pare it down even more. That was a pretty nice looking little system. 43 wins, 2 losses, 88% win. Yeah, very comfortable to trade something like that with a tiny little stop. Tiny little stop in an insanely volatile market. What would the stats look like for that? So 63, 63, and without the break even, it's 1-to-1. Yeah, and so could you do this at 8 ticks? Get it right on down there, yeah. 8 ticks, yeah. 8 ticks, win or lose, yeah. Yeah. This is again, you're actually kind of hurting yourself at that point. You get 22 consecutive wins, 4 losses, and you still got a 1-to-1, of course. And then if you go to the break even, which you probably wouldn't even bother with under a system like this, it can improve that quite a bit and make it quite a bit more comfortable. And so you just decide, what if you went, what if you wanted to do 20 and 20? Now that way you'd get your 1-to-1. Now, would that improve things? Ooh, boy, the numbers get real big when you start doing that. Numbers get real big when you start doing that. Look at that ratio. It's crazy good. What that tells you is that the market is so darn volatile that you just have a huge amount of flexibility. It actually improves with the increased amount. What this is telling you is that based on the way this system enters, it gets caught in winning trades a huge percentage of the time. What if I do the break even on that? What'll happen? That knocks it back down to 60. And so you just kind of weigh where you want to be. Now, what's a main thing that a main point about this? You see, we've tried like all different kinds of combinations using all different of these features. And I haven't even played with the trailing stop. That gets into a whole nother thing. So, like I said, in today's video, I'm going to focus on the ratio, the win-loss ratio a lot. And also the notion of scaling this to what's going on with the market. But what would happen is if the market starts getting less volatile, which I actually don't expect anytime soon, you could just scale this to another one of the tranches or whatever way you'd want to look at it. Not do 20 as it starts getting less volatile. You could make a tighter little system. And if the market gets real lazy again, you start pushing down into this 8 and 4. 8 and 4 stuff. Like I said, you could do 8 and 8 and it would still work. But you'd be giving a lot away and you'd be paying a lot of commission and those kinds of things. You weigh those factors into it. But I like those high win percents and everything else. But what I really wanted you to get out of this video is how you can adjust your money management if you have a halfway decent system, you adjust your money management to really the way you want to do it. Yeah, really the way you want to do it. But when the market gets super crazy volatile, it's just like one trade after another all day long. And this is just a few days on this report. This is actually only 2 days of results on this particular report. That's how crazy volatile these markets are right now. So, okay, that's what I had for you for today's video. I teach these concepts that we're discussing here and more advanced and trading secrets and tips and associated nuances in my trading room daily. If you like this kind of content, if you like learning about trading systems, if you like learning about the theory that's behind them, you might want to come join us over at the oil trading room. We trade in crude oil because it's a statistically consistent market. And those concepts, of course, can be used in any market that you choose. Today's video took advantage of powerful features using Smart TradeMarkers from IndicatorSmart. Using TradeMarkers has been a game changer for a lot of traders. In fact, it was a huge game changer for our trading room and the technology that we developed with it, the trading technology that we developed with it. There's a lot of other videos that I've done on TradeMarkers on this channel. It helps you to know what works, what doesn't, and how to execute it to best advantage. Always test the way you trade and trade the way you test. Yeah. And so that's what I have for you in today's video. Thanks for joining me. All trading resources can be found at IndicatorSmart.com. If you haven't gone over there, go over there, get free NinjaTrader indicator, and join our list there and take advantage of some of the 4-quadrant methods that are there, and take a look at the site. A lot of the videos on the products on the site are there for educational purposes. They cover key concepts and things that you can do with your trading that can help you to do it your way. So, all right, guys, that's what I got for you today. Thank you, and we'll see you all on the next one.